Hey guys, welcome back. So today we're going to be looking at transactions in accounting. We're going to be looking at the accounting equation quickly. We're looking at a new acronym that you'll know for the rest of your life once you go through accounting. We're going to go through some steps in transactions. And last but not least, some transaction examples. We'll do some video screen records and walk you through a couple of examples. All right, so let's get going. And as a quick reminder as well, don't forget to subscribe. That way you get notifications right away. And any videos, as soon as they get posted, you get a jump on the class. All right, here we go. So what is the accounting equation? Well, the accounting equation is the foundation. We talked about that all assets equals liabilities plus equity, owner's equity, right? So it's the foundation of double entry into a bookkeeping system. Okay, so the key part also is that every debit, there is a credit. So that's a key thing to talk about, and we'll go through that. So there's two sides of it. So there's always two entries, not just one. There's always two entries. All right, and that's what, in a quick nutshell, what the accounting equation is. But let's focus and get right into getting some steps and getting ready to put some transactions in. Okay. Okay, so let's look at some of the type of accounts. So some of these we've already covered, but we're going to start going through and start separating them in increases and decreases. So some of the accounts that you should know already: assets, liabilities, capital, revenue, expenses, and withdrawals. So when we do this, this acronym, the reason why we do it, ALCREW, is so that it helps us identify which side increases and which side decreases when we do start inputting transactions. So here's how I like to do it. It's a quick, short little part. So you can easily remember ALCREW, but what comes next is the tricky part. Which ones increase and which ones decrease? If you start off with this one, like number one, so A plus gets the plus side on the left-hand side. The last two, so one gets one. The last two expenses and withdrawals get plus on the left side. So if you start that way, then the rest is easy, right? Because then what we know is everything else. So the opposite of the plus for assets is going to be a minus or a decrease, right? Also, from a liabilities, if we know these are the only pluses on the left-hand side, then we know this liability has to be a minus or a decrease. Capital must be a decrease. Revenue must be a decrease. So now we know all the left-hand side. Now we can fill out the right-hand side, right? So we would have decrease, increase, increase, increase for revenue, decrease for expenses, and decrease for withdrawals. Okay, so let's see what that looks like. As you can see, here it is all laid out. And if you start with those three that I mentioned, being the increase on assets and expenses and withdrawals, you can fill out the entire chart from that. All right. The key part is also that the left must equal the right, and that will become more common and relevant when we look at the steps and how it relates to the T-charts. Here's what I recommend for every test. Every time you go to do transactions, write this down somewhere, right over here. I made a note, right? Keep calm, write it down. It's a quick reference, because if you think to do it in your head, you will make mistakes. The smallest mistake can have a trickle-down effect down the road. All right, so write it down, get in a habit of writing down, and then we're good to go. So let's look at a few tips and a few steps to look at how to deal with transactions. So the 5 steps for doing transactions, okay? So my suggestion is write these down when you're getting ready to do it, and follow the steps until you get really comfortable and create some behaviors that it becomes really easy, okay? And you become really consistent at it, because usually you miss steps, and that's when mistakes are made. So the very first thing we need to do is identify which 2 accounts are going to be affected. And we talked about all the accounts in previous video when we looked at what falls under assets, what comes under expenses, liabilities. Okay, so we're going to look at which of those accounts you're going to need to use. Are they increasing? Are they going up? Or are they decreasing, going down? So if someone gives you money, is your cash going up or is it going down? Okay, so obviously it's going up, so it would be increasing, right? Third is which type of account does it fall under? Is it fall under an asset? Is it a liability? Is it a withdrawal? Or is it revenue? So understanding which of those headings it falls under. Fourth, we're going to fill out the T-chart. And then last but not least, we're going to make sure that the left equals the right. So that's what we're going to do. Make sure it's a kind of a double check, because if it doesn't make sense, and when we do the screen record, you'll see me going through these step by step. All right, so write these down, have these available to yourself, along with the ALCREW little acronym with the pluses and the minuses, or increases and decreases, and you'll be good to go. All right, let's move on. So a couple of tips before we get started to understand is that with every transaction, there's at least two inputs, right? So you're going to be entering the number in twice. It has to go somewhere. So left has to equal the right. So therefore, it always has to have two. Another one, some of the terminology that is used, the word recognized, sometimes it's just confusing sometimes. So I like to replace it with the word used. So when you say an amount was recognized, you can say used. Okay, input that used into it, and it helps clarify it a little bit. Same with incurred. That's another one. Substitute used. It may help clarify the question more. When you hear the word invested, it always means capital. So that's another quick little trick to write down and remember when you see those words popping up. Accounts payable and accounts receivable, number 5 and number 6 here. These are the ones that commonly get mistakes. So which one does it fall under? Well, one's an asset and the other one's a liability. So which one's which, right? So having things is always a good thing. So when it's accounts receivable, right? Receiving stuff is good. When someone gives you gifts, it's a good thing. So it's A, so it falls under assets. And accounts payable, well, it sucks to pay something, right? Always sucks. So sucks goes down, and a liability is a bad thing. Accounts payable is a liability, and accounts receivable is an asset. And that's a good, quick little way to always have those charts memorized in your head, and a little reminder to which is which, because it kind of sometimes get confusing when you start getting into transactions. And last but not least, when it says paid in advance, sometimes you hear that terminology. It basically means prepaid account. So when something happens within a prepaid account. So that's another little shortcut to remember. All right, there are a few others, and by all means, these are just a few of the many, but these are the ones that I find to help get you through the transactions as they get worded, because it sometimes can get a little confusing. By all means, add more to what works for you, and if you have any questions, let me know. All right, so let's move on. So before we get into the screen record examples, I want you to start thinking. I use the thumbs up and the thumbs down a lot to kind of think, does it go up? Does it increase? Or does it decrease? I know it's just a visual thing, and it's sometimes a lot obvious, but it sometimes helps to visualize whether something's going up or it's going down. Is it going a plus, or is it going down? Okay, is it decrease? So with that being said, let's go into the screen records. And if you want to follow along, please pause the video as we go through, and hopefully the examples we'll give you. There's 2 examples I've given, and hopefully they help. Through an example. We call it example number 1. So what's the very first thing we should probably do? If you said write down your ALCREW, you're absolutely right. So let's do that first. So assets, liabilities, capital, revenue, expenses, and withdrawals. All right. And then we learned from the videos that the first is a plus, the last 2 are a plus. And once we know that, we know how we can fill the rest out. So we don't have to memorize it. We just got to remember the first is an A, 1, and then 2. So that's a plus. Then we know this is a minus, this is a minus, this is a minus, and then this is a minus, this is a plus, or an increase. If you want to keep it that way, keep it in your mind. Expense is a decrease, and withdrawals is a decrease. Okay. And then remember the 5 steps, right? So 5 steps, right? So first, identify. I'm going to write ident and the 2 accounts. Right, so remember from last week, we talked about all the different types of accounts. So we're going to identify the 2 accounts. Step number 2, is it going up, increasing, or is it going down? Is it decreasing? Step 3, which of the ALCREW heading does it fall under? ALCREW. step 4, fill it out. This is obviously the short form, fill it out. And then 5 as a check, does left equal right? Okay, some really good guidelines to go through as we do this. All right, so you can either have a printed T-chart or if you want, you can write them out as I go as well. So the very first thing I'm going to do is I'm just going to write a couple right now that I know, right? So we know we're going to need assets, right? We're going to need a liability chart. We're going to need a capital or owner's equity chart. We're going to need a revenue chart. Just drawing just one T-chart per account for now. And as we need them, we'll just draw them in. An expense, name of the account. All right. And if we need to do withdrawals, we'll put it over here. All right. So we are good to go. The only other tip I probably would add as well is now that I know the ALCREW this way, I would transfer it up here as well. So I know this is a plus, this is a minus. I know these are pluses, so I do this right away so I don't screw it up. All right, now that we know that, then we know this is a minus, this is a minus on the left, this is a minus on the left. Now that we have all the lefts filled out, we know that this is a plus, this is a plus, we're increased, it increases on the right. And you can, whoops, see, you gotta take your time and you make mistakes just like me, whipping along. All right, decreases on the right and withdrawals decrease on the right. All right, so we are all prepared. We got our little cheat sheets here with steps that we're gonna follow to help us, and then we'll go from there. All right, so Skylar recently started her own shoe repair business. Here are a list of the transactions for the first month of operation of August 2020 are as follows. All right, so Skylar invested $19,007 cash into the business. Okay, so first of all, identify the two accounts. So if it's cash, I mean, that's always a tip right there. So cash is one account. And then she invested. So we talked about invested means capital. So over here, right, would be another one. So let's label the accounts. So this is cash or bank. I'm just going to put that there as well. Like I said, it's a good little tip just to kind of remember where the cash is, right? It's not actually in your hand, it's in the bank. And then this one here is capital. All right. So invested cash into the business. So when we look at a thing, did it go up or did it go down in these two accounts? Well, cash, if she invested, so she invested into it, so it went up, obviously. And did the other account, did it go up or down? Capital, it went up, right? Because she has more capital. So, and this is the key, because it's on the right-hand side, right? So, if it went up, capital went up on the right-hand side. And last but not least, left, does left equal right? Left equals right. Perfect. Check. All right, let's move on to number 2. Paid 2 months rent for $1,100 in advance. All right, so going through the steps, let's identify the two accounts. So the first account is when we see paid, right, with cash. So we know cash is one, right? So what would be the other account? Remember, paid 2 months rent in advance. That's a keyword, advance. So prepaid, right? So anything that's prepaid is an asset. So we're going to need another account here. And we're going to call it prepaid, just because it doesn't fit, prepaid rent. Right. All right, so those are the two accounts. So paid too much rent in advance. So did the cash go up or it went down as we're looking at the two accounts? So if we paid something, it went down because it came out of the bank. And then the prepaid rent, did it go up or did it go down? It went up because we paid for it, right? Okay, so the bank went down $1,100 because it went down according to our ALCREW, and then our prepaid rent went up. So it's $1,100, right? So last but not least, I mean, we obviously filled it out. Does left equal right? Left equals right. Check. Purchased store equipment worth $3,800 in cash. Okay, so let's think about it. So we're purchasing something, so we know again right away what's one account, right? Because we're identifying the two accounts, right? So cash is one, and purchase store equipment. So what would that fall under? Right. So if you had said store equipment, you're absolutely right, which is an asset. So again, I might make so store equipment. Store. Oops. No, that's crazy. Store equipment. All right. So we had to pay for it, right? So did it go up? So obviously cash, well, if we paid for something, we purchased, it went down. So $3,800, right? Because it went down, because it says right here, assets, right-hand side goes down. And do we have more store equipment? Yeah, because we purchased it, right? So now we have, on the plus side, $3,800, and we're following the steps, we're filling it out. And last but not least, does left equal right? Yes, it does. Perfect. Check. All right. Incurred. So here's, remember, one of those words that we talked about earlier in the video. What does incurred mean? A good way to kind of interpret it as used up, where we used, right? So let's interpret that. Used, business registration expense, paid with $780 cash. All right. So looking at the thing, what two accounts? Well, if we paid cash, we know cash where assets are going to be one, and registration expense. So that would be another one. So we need to have it. So an expense over here. So account registration expense. Okay. All right. So if we paid with cash, right? So did it go up or did it go down? Right here, we're looking at our steps. Cash, it went down. Correct. So $780. And it's always a good thing. If you know, remember down here, we know left equals right. So we know, have a good chance that somewhere, if we don't know which, it's going to be on the left-hand side, because we know for sure the cash went down. That we know, right? So if we look over at the registrations, did our expenses go up? Yes. So again, keep in mind though, right? If you look at the ALCREW, where the E is the increase is on the left-hand side and the decrease is on the right-hand side. So our expense went up $780. Perfect. And does left equal right? Left equals right. Perfect. Check. Paid a travel expense worth $1,150 cash. All right, so going through the list with two accounts, so paid, cash, so we know cash is always, and bank is going to be the biggest one, right? That's where most of the money is either going in or going out. But most of the time it's going out because you're paying for things. And then just where does it go, right? Because we have to make sure left equals right. So paid a travel expense, so it tells you it has the word expense in it, so we know it's an expense. And did it go up or did it go down? All right, so expenses generally go up, right? Because you're paying for expenses. So this would be travel expense. We have to make another account. Travel expense. Perfect. So we paid for it. So we paid how much? $11.50. It went down because we paid for something. And left to right hand side, well, we know left has to equal right, so this is the right, so this needs to be the left. So travel expense went up because, again, plus side, $11.50. All right. All right, let's keep moving on. Check. Received $2,400 cash from a customer. So think of it the cash, so you actually received it, right? For shoe repair service performed during the month. Okay. So what are the two accounts? So if we received cash, that already tells us which one it is. So cash and bank, right? From a customer for shoe repair service performed earlier in the month. So what does that fall if we actually received money, right? Is that a liability? Capital? No. Is it revenue? Yeah, because we received, right? We made some money. Excellent. So let's look at that. So received cash. So did cash go down or did it go up? Well, it went up, right? If we're looking at our charts, it went up. So cash went up. So cash went up $2,440, right? And we know it goes on the left-hand side because the positive. And did our revenue go up or did it go down? Did we make money or lose money? We've made money. So looking at the ALCREW, right, the plus and minuses were the increase. The increase, this is where it gets people to make the mistake. The increase is on the right-hand side. So we made revenue-wise. Sorry, I gotta put a heading there, I missed it. The revenue, right? So it's service revenue. Service revenue. Perfect. And last but not least, does left equal right? Yes, left equals right. Check. All right. Provided shoe repair service worth $1,200 and $1,230 on account, right? So on account, so does that mean they actually received money? No, right? That means they're going to receive money down the road. So accounts receivable, is that an asset? Yes, right? So we're looking at it. So one of the accounts is accounts receivable. And what would be the other account? Right? Because we did work, right? Right. So it would be service, so it's revenue. So that would be the other account. So the question now becomes, did they go up or did they go down? So let's look at it. Makes it a little bit easier if you draw it out. So accounts receivable, right? And we know, think about it, right? We're going to receive money down the road. Did that go up or did it go down? Well, we're going to receive money, so down the road, so that would go up. And then it's the service revenue. Did we go up or did it go down? Yeah, well, it's a revenue. We made money on it. They just haven't paid for it yet, right? But we've made money. So $1,230. And then last but not least, does left equal right? Right equals left or left equals right. Exact same thing. Perfect. Right, because it's on account. Remember, it's not cash. All right. Paid $1,400 to an assistant. All right. So as soon as we hear paid, where'd the money come from? Well, it had to come from the bank. So we know that for sure is one of the accounts. So cash is one. And then we paid somebody. So what would that fall under? An expense, right? So we'll make another account. Another word that we use for paying someone, or salary, right? Salary expense. So if we're paying employees. Okay. So we paid. So I'm actually just quickly going to make some room here. Quickly. And this happens all the time when you start drawing these out. It's easier when it's paid out. So that was prepaid rent. Right? And it was $1,100. Right. Just so that I can have some more room here for my cash account. Should always try to remember, I forgot, we should always make the cash account T-chart a little bit bigger. So, all right, so paid. So did we gain money when we pay somebody? No, we took money out, right? We had to go to the bank, take money out, and pay the assistant. So we paid them $1,400, so it went down. And did that expense go up or did it go down? It went up. And it goes on the left-hand side because it's a plus for expenses. And does left equal right? It does. Excellent. Moving right along. So borrowed $1,040 cash from the bank. All right, so if we borrowed money, right? So, right, what would that come from? Well, it's one of the accounts. Cash. It says it again right there, right? And then if we borrow money from somebody, is that a good thing or a bad thing? It's a liability, right? It's a bad thing. So now we owe money, right? So we need to create another account because we borrowed from the bank. So we need to create an account called bank loans. If you remember from last week, it's one of the accounts. It's common for a liability. All right, so did they go up or did they go down? So one account is cash. We talked about that. Did it go up? We borrowed money, so we received cash. So cash went up. So the cash went up how much? $1,040. Right? And bank loan, did it go up? Do we have more in the bank loan now? Yes, it went up, right? So is it on the left? No, it's on the right because right here it tells us that. So $1,040 on the bank loan. Does left equal right? It does. Perfect. Check. All right. Received $760 in bills for utilities to be paid next month. All right. So received bills. So no one likes to get bills for things, right? Car bill payments, utility bills, any bills are bad. So if something's bad, what does that fall under? Right? Generally a liability. So that's one account that would fall under. So it would be accounts payable, right? Because we have to pay it down the road. So that's one. So we'll make that account in here. So, and that's always one. Accounts receivable and accounts payable are always going to be there, right? If you pay something, it's bad. If we receive money, it's good, right? Assets are good, liabilities are bad. And then does that become, what's the other account? So received bills. So if you had a business and you're receiving bills, what would that be? Is it an asset? No. Liabilities, well, that's one account. What's one? Is it capital? No. Did we make money on it? No. Is it an expense? Yes. Is it a withdrawal? No, absolutely not. So it absolutely is an expense. And what kind of expense would it be? Have to make it. So it would be utilities. So write out utilities expense. Right. Okay. So now, did they go up or did they go down? So accounts payable, so we're gonna have to owe it down the road. So that now something that we're gonna have to owe. Did it go up? Yes, unfortunately, it's something that added to our accounts payable. So it went up $760, right? So we kind of know, again, remembering left equals right. So we know already, if this is correct, that this has to go on this side, on the left-hand side. And if you want to verify it, well, did our expense go up? Yes, it did, because up here, the plus, right? The positive is, or the increase is on the left-hand side. Where in liabilities, the increase happened on the right-hand side. All right, so left equals right. We are all good. All right. Skylar withdrew $970 cash for personal expense. Okay, so cash again gives us right away which two accounts. So cash would be one, and personal purposes. So remember we talked about this before, but that withdrawal or with drawings falls under this account. So you can just put personal if you want. They're always personal withdrawal. And did the cash go up or went down? It went down because we withdrew money. So it's easier to always start from the bank, I find, because you can follow where the cash goes, right? They follow a little bouncing ball. So cash went down because she withdrew money from the bank. I'm running out of room here. And withdrawals, did it go up or go down? She withdrew much, more withdrawals. So it is $970. All right. So check, that's done. And last but not least, received $490 owing from a customer. Remember, they put it on an account earlier up there. So they had received $940 owing from a customer for service provided earlier this month. All right, so we received, right, money. So we received cash. So that's one count from a customer owing provided earlier this month. So when before, remember, they were going to owe us money. So remember, receiving is a good thing here. So that's excellent. So we received the actual cash. The customer paid. So did it increase? It increased because they gave us money. So $490, right? And accounts receivable, because that person, remember, it was a good thing, right? They owed us money. So did that go up or went down? Well, they don't owe us as much money anymore. So now it goes down $490, right? And we're done. So check. So all our transactions are complete. The last thing that we would need to do would total everything up, and I didn't leave a whole lot of room here. So if you were to add up all of these, this one would be 14,470 according to my math, and I double underlined all the time, so I know that's the total. Prepaid rent hasn't changed, so that's their total. Store equipment, $3,800. Accounts receivable, $740. $40. Okay. Loan hasn't changed, so that's the total. Accounts payable hasn't changed anymore, so that's it. There's no more capital. That's final. Service revenue, so if you total that up, 3670, and again double underline because that way it's easier to understand the totals, because if not it gets confusing, so double underline helps you with the totals. 780, there is no more registration expense, so that's the total. Total travel expenses for the month was 1150. Total salary expense was 1400, sorry. Utilities for that month were $760. And last but not least, total withdrawals were $970. All right, so that's it for example number 1. Take your time, follow the steps. This is crucial. It'll make things go easier, and then we're always comparing left versus right. All right, hope that helps, guys, and we'll see if we can do another example. This is example number 2. Again, let's start off with what we should always be putting down as a little cheat sheet. So ALCREW is always where we want to start. And we know the first one's always positive. If that one's first positive, it's 1, 2. So this is positive. And then these make these decrease or negative. If we know the left-hand side, then we know the right-hand side. Liabilities, capital, revenue, expenses, withdrawals. Perfect. And then what else? Let's quickly put down the 5 steps. All right. So number 1, ident the accounts. So all the accounts that we learned last week or last video. Oops, number 3. Number 2, is it increasing or decreasing on the accounts? Number 3, which of the ALCREW does it fall under? Which heading? 4, we fill it out. And last but not least, we double check. By checking, does left equal right? 5 steps. Perfect. So then let's start by writing out the headings. So we have assets, liabilities. We're going to write this one a little bit differently than the last one. So equity, revenue. Actually, I'm going to leave a little more space. I ran out of space. Oops. So assets, liabilities, equity, revenue, and expenses. And under equity, right, with a 2, is capital. And withdrawals. All right. So we know assets from here. It's increases. That's increases, and we know this decreases. Liabilities, capital decreases. Revenue decreases. Expenses increase on the left, and withdrawal increases on the left. So now we know that. So we know this is decrease, increase, 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 decrease, and decrease. Perfect. And I'm just going to draw my first T-chart right away because we know which one it's going to be. And we know it's going to be a little longer. So we're going to call this bank, cash, just to help out. All right. So now that we have everything all written down, let's start working our way through. So number 1. Sorry, let's read it first. Sheila, Walter opened a dormitory locator business called Dormitory Locators near a college campus. During the first month of operation, October 16th, Sheila had the following transactions. So number 1, invested $16,000, $900 for personal funds to start the business. So which 2 accounts? Well, if she invested money of her own personal fund, it's her own capital that she owns. So that's 1. And to start the business, so the business owns it, so it's part of an asset, right? So that's the 2 accounts. So if she invested personal accounts, did it go up or did it go down? If she invested her own money, it went down, right? And if she invested money into the cash, right, it went up. So let's look at that. So if she invested money of her own capital went into the money, right? So it went up, up, sorry. $16,900. And their asset also went up, right? Because it went into the company. She spent her own capital, right? And then is left side equal right side? Left side equals right side. Incurred, what's another word for incurred? Used, right? So used travel expenses for $13,070, which will be paid later. All right. So if something's going to be paid later, is that a good thing or a bad thing? Well, if we have to pay something, it's probably a bad thing, right? So it's a liability, and it falls under the first one. So accounts payable is one account. And what's the other account? Well, think about it. She travel expense, it's in there, expense. So it's going to be an expense. So we'll label that account travel expense. Travel expense. Okay. All right. Did they go up or did they go down? Well, if it's a liability, because it's going to be paid later, it went up, right? So it went up. Right? We know it went up because of the plus, because it increased. And our travel expense, did it increase or decrease? We have more travel expense. We increased, so it's a plus, so it increased, so it's also on the left-hand side. 1370, we filled it out. And does left equals right? It does. Check. Paid $650 cash for maintenance expenses. So cash is one, says it right there, for expense, tells you the other one. So it's an expense, right? So we need to make another account. Maintenance expense. All right. All right. So paid. So did it go up or did it go down? If we paid something, we took money out of the bank. So it went down $650. And it was for maintenance expense. And did our expense go up? Did we pay more for an expense? Yes, so it went up. And in this case, under expense, it's on the left-hand side. And does left equal right? It does. Yay, so we're following our steps again. Good way to work you through it, right? All right, number 4, receive $4,600 cash for a service provided to clients. So we receive cash. So again, we know one account is cash. And we also know that it is for service that we provided, right? So that if it's service, we made some money as the business. So it's a revenue. So we're going to write service revenue. Sorry, it's hard to work sometimes with this little thing. Service revenue. Okay. So we received the cash. So did our bank go up? Yeah. So we got the money in our hand and we went and put it in the bank. $4,600. And the revenue, because it goes up or increases on the right-hand side, we would put service revenue for $4,600. So left equals right. Check. Paid $1,370 on account. Purchase in transactions in number 2. So we paid for some of the issues on that we owed, right? On, I think number 2 was travel expenses. So we paid for our travel expenses. So if we paid for them, right, it means our cash, we had to go to the bank, and the bank went down. And then with our accounts payable, do we owe it more? No, so it would go down as well, right? So we took money out of the bank, $1,370, and put it towards our payable. We paid for our account, so $1,370, because it went down, right? We no longer owe it anymore. So that's a good thing. We filled it out, and does left equals right? It does. So we're good. All right, number 6. Number 6, pay 3 months of office rent costing $1,500 in advance. All right, so what are the 2 accounts? Well, obviously pay, your pay, so it's cash, right? And if it's prepaid, because in advance, when you hear the word advance, it means it's going to use it up down the road, so it's still an asset. So we need to create that account because we haven't used it, right? We're prepaid for the rent. We haven't used the month, just the beginning, in advance. All right. So prepaid rent. Right? If we had lived there after the 3 months, then it's gone, but we haven't used it up, right? We just paid for it now, but we haven't lived there for 3 months, so we haven't used it up. So pay for 3 months of office rent costing us $1,500 in advance. So if we paid for it, our cash account would go down, our bank account, right? And our prepaid rent went up, right? Because it's a positive, so increased. So our prepaid rent went up $1,500. All right, moving right along. Incurred $370 of utility expense, which will be paid later next month. Okay, so again, using the word incurred means, if it gets confusing, here's the terminology: used up $370 of utility expense, which will be paid later next month. All right, so we know that it's an expense. So that's one account. We know it's an expense. So it's a utility expense. Excellent. And which will be paid later next month. So it's a bill, right? So it's accounts payable because we're going to pay it later. All right. So the 2 accounts payable and utility expense. Are they going to go up? Well, accounts payable, are we going to owe it later? Yes. So that went up. So that's something that we owe. And did our expenses go up? Is it something that went up? It also went up, right? So that would be on the left-hand side. Why? Because it increases, and our liability increases on the right-hand side. So left equals right. So we're good. All right. Moving right along. Received $970 cash from a customer for services to be provided in 2 months. So we haven't done the job yet, right? But they paid for it up front. So if they paid, we follow the cash. Which 2 accounts? Well, cash is one. And what else would it be? Would it be service revenue? No, It's like because we haven't done the job yet. So technically, if we decide we're not going to job, they could take the money back. Okay, so it's a liability. So we need to create that account. And if you remember what that account is called, have we earned it yet? No, so it's unearned revenue. And this is where some people get confused because it's under a liability, right? Because we haven't received it yet. We have the cash, but we still owe it. So it's a liability. We still owe that job. All right. That's where the confusion sometimes comes along. All right. So we received the cash. So our bank went up, right? And it now becomes a liability because we have to do the job. And keep in mind, if we decided not to do the job, they could sue us and get the money back. So it's a liability, right? Because we haven't come through on it yet. We haven't earned the revenue. So because that liability increases, because we know it on the right, $970. All right, done. Provided $1,050 in services for a customer who will pay later. So again, pay later, right? We know that that's money that we were going to receive later. So customers are going to pay, so we're going to receive it later. So the name of the account, accounts receivable, because it's a good thing. People are going to eventually pay us, right? And what else comes up? Well, because it's a service, right? We provided the service, and they'll pay us later, so we've earned it, right? So it would fall under here. So service revenues, we earned the money, we did the job, right? But they're going to pay us later. So our accounts receivable will also go up because they're going to owe us money later. Okay. So left side equals right side. Perfect. Recognized, there's another one of those words. So what does that mean? Used, same as incurred, so used up. So used up 1 month of office rent that was previously prepaid. So remember we paid for 3 months rent. Well, now it's at the end of the month and we've used up that prepaid rent. Okay. So now what does that become? All right. So we know that was prepaid rent that we haven't used it, but now we've used up the rent. So what would that be? Well, rent it's not an asset, it's not a liability, it doesn't fall under the equity, it's not revenue, it's an expense, right? You have rent expense. So rent expense. All right. So this is where it gets tricky. So if we go back 1 month of the rent, so how much did we pay for? We paid for 3 months rent. Okay, so if 3 months rent was $1,500 and we only used 1 month of it, that means we've only used up $500 of the prepaid rent. Does that make sense? Right? 1,500 divided by 3 means each month costs us $500. So our asset has gone down now because we've used up 1 month's rent. So our assets has gone down. And our rent expense has gone up because now we've burned through 1 month's rent. Left equals right. All right, so just be careful that you're dividing it when it's saying 1 month. You got to go back sometimes and look at the previous transactions. Sheila withdrew $1,100 cash for personal use. Okay, so what are the two accounts? Cash and withdrawals, right? These ones are pretty straightforward most of the time. So did it go up or did it go down? So the cash went down because we took it out of the bank. The bank, which was the business account, right? And we put it into our own technical pocket. So we drew the money, so that went up. So our withdrawals went up, or our drawings went up. So left equals right. All right. Purchase a secondhand car worth $6,310 for business and use with cash. All right. So we know cash is one because we had to go to the bank to get the money. And then we bought a car. So what does a car fall under all of these, right? So we talked about it before. A car falls under an asset. So automobile. Okay. All right. So did they go up? Did our cash go up? Our cash went down because we spent the money. And did our auto go up or did it go down that asset? It went up. So we know that they're both assets. So let's fill it out. So $6,310. We went and took the money out of the bank to pay for a car, which now all we did was change an asset from cash to something physical. So the asset went from the left side to the right side, or sorry, from the right side to the left side, essentially. And the car now is worth $6,100 because it went up. The car asset went up. Perfect. Next. Received $720 from a customer owing from a previous service provided earlier this month. So remember, somebody owed us money. All right. So what are the two accounts if someone owes us money? So accounts receivable, right? We're going to receive money. So someone actually finally paid it. And then they gave it to us in cash because we put it in the bank. All right. So they accounts receivable. So they paid $720. Right, $720. And then we took that and put it into the bank. Perfect. Right, accounts receivable because they owe us money. All right. Boom. Done. So now we just need to total these up. And if you did the math on cash account, it would be 112,260. And on the positive side, we'd have $1,100. $1,000 in prepaid rent. We'll have accounts receivable still owes us $330. And the auto hasn't changed, there's no more. Accounts payable. We still owe $370. Our unearned revenues, that job that we didn't do, is still owed. There's nothing more. Capital is $1,690. Withdrawals, $1,100. There's no more. Service revenue, how much money we made, $5,650. Travel expense is the same. Maintenance, just that one. Utility, only one bill. And we only went through 1 month's rent. All right. So that's pretty much it, guys. That's example number 2. Yeah. Hope that's helpful.